All right, so let's get into this. We've got this source that details a pretty intensive project.
Right.
3 years of work, building a trading bot completely from scratch.
And specifically for gold, which is key.
Yeah, XAUSD. So our mission here is to really get under the hood and see what design choices make this thing, prop firm friendly.
And I think what's fascinating from the get-go is the philosophy. The developers are clear. This wasn't about making the most profit possible.
Right. It's about survival.
Exactly. It's about creating a low drawdown system that acts like a really disciplined trader just to pass those strict challenge rules.
Which leads to what they call the anti-shortcut design. I mean, it actively avoids all the things we see everywhere else.
All the risky stuff.
Yeah, no grid trading, no martingale, none of that reckless doubling down.
Yeah.
But let's push back a little. They use a fixed 1-to-2 risk-to-reward ratio.
Mm-hmm.
Doesn't that feel a bit rigid? Like you're leaving money on the table if a trade really starts to run?
That's a fair question.
Mm.
But from their perspective, it's a risk management decision, first and foremost.
Okay.
By fixing the stop loss and take profit, you get this incredible consistency in the data. The model becomes predictable.
And predictability is what stops you from getting disqualified by a sudden deep swing.
That's it. They're choosing stability over that potential, home run trade.
Okay, so let's dig into the tech a bit because it's trading gold.
Which is not easy.
No, it's known for fake outs, volatility, all sorts of traps. The source talks about it analyzing market energy shifts. I mean, what does that actually mean?
So that's their term for a multi-factor entry logic. It's not just one thing.
It's not a simple crossover.
Not at all. They're saying it cross-references short-term volume with the longer-term price structure.
Yeah.
It's actively reading volatility with ATR. It's looking at candle impact.
So it's waiting. It's patient.
It's very patient. It waits for what it sees as a high-quality reversal point.
Mm-hmm.
No rushing, no spamming trades.
And that focus on validation, it seems to go beyond just the entries. They talk a lot about long forward testing.
Yeah, not just back tests.
Which can be made to look perfect, right?
Easily. You can curve fit anything. They wanted to make sure the actual statistical footprint, the equity curve, the drawdown, looks exactly like what a prop firm wants to see. Clean, steady, smart.
And the parameters help with that?
For sure. The stop loss, for example.
Yeah.
It's based on the ATR. So it adapts to how volatile the market is.
So it's dynamic but structured.
Perfectly put. It's dynamic, but it's always capped by that fixed risk percentage. So the whole low drawdown goal stays intact. You're protected.
So we've got this system, 3 years in the making, super niche, and you can't just go buy it on a marketplace.
Nope.
That brings us to the transparency part.
Yeah, and this is maybe the most interesting piece. They offer the full editable source code.
Which is built on FXtrema, so it's visual.
Exactly. You're not just getting a black box.
Yeah.
You get the actual blueprint. You can open it, study it, even tweak the logic yourself. The whole system is auditable.
It's a completely different approach. This frame of, total stability and intellectual honesty, it really does feel like the opposite of all the chaotic strategies out there.
It's built to survive, not just to score big.
Yeah.
Survive first.
Which I think raises a really important question for you, for anyone listening. In a world that is just saturated with these complex, opaque algorithms, how much does the availability of the editable source code actually change your perception of trust in an automated system? Something to think about.